Go on then. Aye, thank you very much, everybody, for joining us today. My name is Gordon Willmott. For those that have not met before, I'm from Meraki town. I head up the contract team here, and I'm delighted to co-host this with Deborah Murphy from the FCSA, who's head of ops over there. So this has basically come around. Myself and my colleague Chris attended a session held by the FCSA, and we were chatting about how many clients engage contractors directly, and also there's still a few non-compliant umbrellas floating around out there. And I think previously people kind of discharge quite a lot of responsibility and plead ignorance, and that certainly kind of wouldn't be the case from the kind of legislation that was kind of coming in April. So with that in mind, Chris and I had a wee powwow, had a bit of a chat, and we decided that I thought it'd be a good idea to run a quick webinar and just share some of the information we've received, because it's one of the biggest shifts in contractor payroll probably in about a decade or so, and it is kind of coming in soon, and so it means that those will be kind of included in the kind of tax and NIC contributions right across their temp contract workflows. I mean, that's everything from people automatically think of contractors on big four-figure sums a day, but it's also including just kind of short-term temporary workers, on hourly rates. So, and regardless, it doesn't matter if it's directly through umbrellas or via agencies such as ourselves. Hopefully today will help unpack a little bit more just in terms of what this will mean in practice, how to maybe check out your supply chain, and see, importantly, what you need to do between now and April just to ensure that you're kind of compliant and ultimately avoiding risk. So there's a few key takeaways to be we'll kind of run through as part and parcel of that, but basically around the lines of what's coming up, how to look out for non-compliance, how to obviously reduce your risk, and kind of ultimately what action points and stuff you need to do, and obviously, I mean, how we can assist in kind of helping with that supply chain as well, and kind of reducing your exposure just ahead of any reforms. So as Paul said, feel free to whack in any questions into the chat function, and we've already got a set of questions as well that a couple of people had popped through, which Deborah will kindly answer, as well as any further questions and stuff that come through. So Deborah, over to you. I'll quickly share the slides and that kind of stuff.
Thanks, Gordon. Firstly, thank you for inviting me to speak to you all. We have run a series of webinars at FCSA. We aimed them directly at our members, so the umbrella companies. Took a step further to then offer it out to recruitment agencies, the employment businesses, and then this is kind of like the next round of offering them out directly to the end clients. So my role at FCSA is I'm head of ops, but I'm on the compliance side. So I'm directly involved with the accreditations, Veripay, Diligence Hub. So kind of looking into the backbones of the companies, the foundations, what's actually happening, looking under all the rocks, doing ad hoc testing, not only the annual assessments that we conduct. So the idea of today is to provide you with some key takeaways. We're going to be covering what the reforms look like. So how JSL, so Joint and Several Liability, is actually going to happen in practice. The aim is to give you some warning signs, so things you can look out for, how you can mitigate your risks, so what steps you can take to try and avoid putting yourself in a position you don't want to be in. And obviously all of this is coming from April 26. So if we start with what is actually coming. There is going to be a new chapter of ITPA. It's going to be effective from the 6th of April. They have said that anything before that will not happen. It is going to be the 6th of April onwards. So it's new tax liability rules. JSL is Joint and Several Liability. And it means that HMRC or HMT will be able to go to whoever they deem in the chain, and we'll come to that in a little bit, the relevant party for non-payment So where there is an underpayment of liability and non-payment of liability, and when we talk about liability here, I'm talking about PAYE liability, apprenticeship levy, etc. It will be the whole amount, so they won't be thinking, "Oh, we'll just go for 10%." They will be wanting to recover the full amount, and it's regardless of reason. So whether it's a mistake, whether it's deliberate, a deliberate act, nefarious, they aren't going to look at that. It's not been paid. We want it. And one of the crucial elements here is there's going to be no statutory excuse. So the way that they're going to bring the rules in means that there's kind of no get out clauses. There's no, well, we didn't know about it, or nobody can wiggle out of paying it. And I will cover the smoke screens and the offshore entities in a little bit more detail, but ultimately they're going to be able to cut through the falsehood and go after very specific points in that chain. So when they've talked about the tax regulation that's coming in, they have used an extremely wide net of umbrella company. They've done it really broadly, and in one sense, it's a good thing that they've done it so broadly, because one of our worries when the consultation first came out 2-3 years ago was that companies would pivot. So if you say, right, it's only going to cover umbrella companies, people would then become a PEO company or a payment intermediary, or another word other than being an umbrella company. So they've used this really wide definition. So if you are paying a worker, if you are employing a worker, you fall under this definition. And that's one of the crucial elements here. It's a contract of service, a contract of employment. So it does mean that contract for service potentially could fall outside of scope. And I will come on to that a little bit more. We've got another slide to cover that. When we had the initial consultation a few years ago, there were 3 options on the table. There was transfer of debt, there was due diligence, and there was deemed employment. When they said it was going to be option 3, we were worried that it would mean that it was deemed employment. That is not the case. The recruitment agency will not be the deemed employer. The original idea was that they would use the PAYE reference number of the agency. That is not the case. So we've not got any transfer of debt. We've not got anybody else being the employer. So it's kind of business as usual in that sense. So the umbrella remains the employer. It's still their PAYE reference number that will be being used. And certainly on FCSA members, we ask that PAYE reference number is also shown on the payslip. Not only, so you've got that continuity, but it also stops things like mini umbrella companies, because if a mini umbrella company was being used, you get different PAYE reference numbers. So we make sure that all of that links up, and then you can link that back to the RTI, you can link that back to the compliance pack. Obviously, Meraki will do, I don't know how often you do it, whether it's quarterly or yearly, but compliance checks on the umbrellas that they're using. But what it means then is we've still got that transparency in the chain. So it's still the umbrella's responsibility for employment law, employment rights, employment tax. And that is crucial, certainly as we go into a new world where the Employment Rights Bill is changing as well. That there is going to be a lot more changes and a lot more impact. The umbrella is going to be responsible for more as we move further into the ERB. So it's a good thing that the umbrella remains the employer. So kind of, like I said, business as usual. It also means that there's no contract changes. One thing we were worried about as an industry was that it would be a full repapering exercise, which kind of goes against what the government wanted, which was to stop fire and rehire. But because there is no change, that stays. So all your workers remain as they are. So there's no additional work for you in this. There's no additional work for Meraki in this or any other agency that you use. And equally as well, the key information document doesn't change. one thing we are suggesting and probably prompting the agencies that we work with, our recruiter partner agencies, is to make sure the right terminology is being used. So where we're discussing rates, making sure assignment rate is being used rather than gross rate or contracting rate. Because all of these little things add up and it kind of starts to tell a story. So where the contractor is then fully aware that the assignment rate comes in, it's the top line, it's the highest amount of money, and the employer deductions come off from there. It's still the employer's money at that point. When it goes to gross rate, then it becomes their money and their employee deductions come off. So I'm quite sure that Meraki will assist if there's any terminology queries, and obviously Meraki have got our full support as well.
Going to say,
Obviously,
just on that note, I was just going to say about the key information document side of things as well, just to, if you could maybe explain a little bit about what that is, because we have had a lot of clients that are engaging contractors directly. So they've been our temps, they've been taking temps, contractors on, and they haven't been issuing key information documents at all and didn't realise, because I think it is one of those legislations that kind of snuck up on people. And through agencies, there's lots of agencies that don't issue them as well, but there's a fairly substantial, it's probably say more than not, of our direct clients, sorry, clients that have been kind of taken on contractors and temps directly that haven't been issuing them at all. What are these?
So key information documents. Yeah. So it is a summary of costs is probably the easiest way of saying it. The idea is that a worker knows before they start the role, so before they actually start an assignment, of all the costs that are related to their work. So if you think of the assignment rate as the very top line, there will be a margin that the umbrella company would retain. There will be apprenticeship levy at 0.5% if the pay run is more than £3 million. There will be employers' national insurance, employers' pension. So all of these figures are meant to be stated. So when a contractor gets their wage, they're not shocked that there's all these extra costs coming off that they weren't aware of. So if you think of your payslip is gross pay down. You don't see what the employer costs are behind the scenes. Whereas in the umbrella world, they see it all. So they see from the very top level, the employer costs and then their own costs. So the key information document was designed, the Employment Agency Standard Inspectorate, I always get the letters the wrong way around, wanted to make sure that workers were fully informed before they started a position. Now, with FCSA members, we also expect them to provide an illustration to every worker before they start work. So not only will they get the key information document from Meraki, for example, they will also get a direct, an illustration that is tailored to them. So a key information document can be generic. We would rather it wasn't, but it can be. But the illustration should be specific to them and their needs. And it also then stops any confusion or query about what the potential weekly take home would be. So the contractor's walking into that role fully aware, knows what's happening with the holiday pay, for example, knows what's happening with the pension. If they're a high earner, so if they're going to potentially be over £100,000 a year, that how the tax is going to be affected. So it provides a bigger picture, but for them to make an informed decision.
Wicked. Thank you so much.
Okay, so going back to Vicky's just popped a question in. Who's the responsibility to send the KID? Where an agency is involved, it's the agency's responsibility to send the key information document, and it has to be sent before the assignment starts. So when the reform has been noted, bear in mind we are still only on a draft reform right now. We are expecting the final outcome to be this month, maybe next. They have mentioned the relevant party, and what that means is the company that will hold joint and several liability with the umbrella is going to be the topmost agency in the chain. So it's the agency that has the direct contract with the end client. If there isn't an end client, if there isn't an agency in the chain, the end client holds the liability. Where there are connections, and this bit is probably one of the most crucial parts for yourselves as end clients, where there is a connected company. So you may have the element of joint employment. I don't know if you've come across that terminology before. As FCSA, we don't actually permit joint employment within any of our members, on the basis that it's not clear for the worker who is responsible for anything. So you can only have one employer for us. But there are companies out there who offer joint employment. If that is the case, you could have, for a really simple change, you've got an umbrella, you've got the agency, and then you've got the end client. If there is joint employment between the umbrella and the agency, so they become connected, that connection is going to be ignored by HMRC. So it would mean that the end client then becomes liable. What we are, I suppose our concern is that joint employment will happen and the end client won't be made aware of it, which would potentially then put you on the hook for something that you didn't know you were on the hook for. So I think just the first point I just want to stress to you is work with companies that you trust, work with companies that are transparent, and are willing to answer the questions that you ask them. So, you can outright ask, are you working? Are you connected to any of your umbrella companies? Do you have joint employment with any of your umbrella companies? If you're getting the answer is yes, it changes where the liability will sit in the chain. So that's one way you can help mitigate that risk, by asking those types of questions. The other element that they've put in, which is to try and avoid a fraudulent chain, or for a company to get out of being responsible, is anything that's not UK based, they are going to ignore. So if you've got an agency that is offshore, they will ignore that and go to the next one up. So, and obviously the next one up would be the end client. So again, it's another point you need to be aware of as end clients, is that making sure the companies you are working with, who you contract with, is UK based. Because again, I think probably later on there's another slide which has got an image which will show you clearer, but it's the topmost agency. So it's whoever contracts with you as an end client, they are the ones that hold the liability if something goes wrong further down the line. One thing I haven't mentioned there is MSPs, so managed service providers, will be included even if they are not in the payment chain. So what we're talking there about is neutral vendors, MSP. So even if they have just been brought in to find somebody, there is no money flowing through them at all, they will still be caught under the new rules. And because the chances are the MSP will be the one that contracts with the end client, they will be the one that holds the liability. They've also used, at the same time as using the relevant party, they've brought in this new phrase called purported umbrella. And what they've said with this is if it looks like an umbrella and it's paying like an umbrella and it's contracting like an umbrella, they're going to class it as an umbrella, so it will fall under the new Chapter 11. And the new Chapter 11 is the ability to move the joint and several liability so they can go after somebody else in the chain, that topmost company that contracts with the end client. The idea is to avoid the mini umbrellas, and I'll go back to what I said before about one of the quickest ways to spot a mini umbrella is the change of use of the PAYE reference number, because they'll be putting in under new numbers every time, or obviously after a certain period it will change to a different one. We've already seen, well, when I say we've seen multiple times, I think the draft legislation, I think if it came out on a Monday, by the Wednesday we'd already seen let's say an arrangement that yes, it will be fine and it won't come under JSL. It would have been caught by this purported umbrella. And false self-employment, so where there is they're being paid under PAYE but they've got a contract for service, if it feels so like that hybrid model, if HMRC want to deem it as an umbrella because it's purporting to be, they will, and the legislation is going to allow for that. They're going to make some further changes, so it's not only Chapter 11 of ITPA that they're changing. They're going to need to make a change to, it's far too long a word of this one, Social Security Contributions and Benefits Act of 1992, to make sure that it covers the NIC, so the National Insurance Contribution also. Within that, it will also cover apprenticeship levy. The Section 44, Chapter 10 of ITPA, there'll be a provision put in there regarding fraudulent documents. So it will not be, if I go back to that very first slide where we said about statutory excuse, even if the agency have been told that everything's been paid and they have been sent fraudulent documents, it will not be an excuse that they can rely on. So and this is obviously a message that Meraki have already had from us. It's really important that the agencies are only working with umbrellas that they trust. And of course, I'm going to say FCSA umbrellas are those. To be a recruiter partner of FCSA, you need to only work with FCSA members. FCSA members go through additional checking. So we use the likes of Ernst & Young, Brabner's, BDO, Safri, and JMW solicitors, and now also Pinsent Masons. They've just joined as an assessor, and they are checking employment tax and employment law. So it's not just, it's not an extra business doing it. We've brought in specialist companies. FCSA themselves are a not-for-profit, so we're not doing this to benefit anybody else's pockets, apart from we're doing it for the industry. So obviously we can kind of give that additional peace of mind to agencies that the umbrellas that they're working with have been through additional checks. And so where fraudulent documents, ultimately you are never going to, if somebody wants to commit fraud, they will commit fraud. But what we can do is make it really, really hard for them to do that by doing so many additional cross checks, and asking them to evidence and prove, and checking bank statements and portals and all those extra things that add up. HMRC are also going to give themselves permission to issue a Regulation 80 determination. So it means historically they've had to go through quite a lot of hurdles and hoops to be able to prosecute. This Regulation 80 takes all that away. They can just enforce the new legislation. So they don't have to, go to court or things like that. They can just say it's wrong, and there's the penalty, the fine. It's now your problem, however they're going to word it. We have had quite a few meetings with HMRC. We are in a very lucky position that we have great relationships with the different teams, and they are really responsive to the additional question sets that we ask. And we do ask quite a lot, and go into quite a lot of detail, usually when they haven't quite got that point yet. But operationally, we need to know the nuts and bolts of what's going on. So the genuinely self-employed, will not fall under these new rules. Those that are deemed to be employees for tax purposes through 7 to 10 of ITPA, which covers IR35, off payroll, etc., will also be excluded from Chapter 11, because 7 to 10 take priority over Chapter 11. CIS is the same, because the key wording in Chapter 11 is employ. So if you are engaging somebody under the construction industry scheme, they are not employed, they are self-employed, so it potentially will fall out. However, this does come with a caveat, and that is purported umbrella. If they feel that they shouldn't have been self-employed, or they shouldn't have, fall under outside IR35, etc., or, the off-payroll rules aren't right for that worker, it will fall into purported umbrella, and then Chapter 11 will be in play. And they've kept that. And I think whether the market agree, as FCSA, we do take the stance that this purported umbrella will be a benefit, because it will stop people trying to come outside of the rules and pivot and make their own rules up. It's giving HMRC the ability to say, no, you're not playing by the rules, you are caught. And ultimately, the idea of all of this is to make a level playing field. I'm sure as agencies, you've seen it, and clients, you'll have seen the same, certainly the umbrellas do, that there will be non-compliant operators in your field who are able, therefore, then to undercut, the compliant operators. And it makes it really tough. So by having a compliant, and a level playing field, it's fairer on everybody. So then the next two slides are kind of just a bit of a visual of where the liability potentially could land, should something go wrong at the beginning of that chain. So if the umbrella did not fulfill their duty and pay the liabilities across, if an agency is involved and it's under a contract of employment, the agency, so the box in red, will be the one that will hold liability. So under a work contract or contract for service, it's still the agency because it's under the existing Chapter 7. If we then make it slightly more complex and we put a managed service provider in there or a neutral vendor, we see it going a step higher up, but you'll notice it's still the one who contracts with the end client. So the only time it's going to become the end client headache, shall we say, is where there is a direct engagement with the agency or a direct engagement with the umbrella. So there's nobody else in that chain. So we would suggest that you kind of put an agency in the chain to make that circuit breaker. The one at the bottom of this slide here where it says agency and it's under a contract of employment, obviously the agency will be employing, so it would be caught under Chapter 11, so it would therefore then be the end client that potentially will be liable should the agency not pay their pay-away liabilities across. On the next slide, we have the flip of where the agency is engaging. So it's an end client to agency direct engagement, or at the very bottom, an end client to umbrella direct engagement under a worker contract. So again, that contract for service. Chapter 7 applies there. So the agency and the umbrella remain holding the liability. That potentially is still all going to change. I don't know if any of you are aware. It is on the table. Whether it's been kicked into the long grass or not, we're still unsure. But the government did want to look at simplifying the employment statuses. So there is still a chance that the worker element will not be worker anymore, and we might just end up with just employment. Because we have 2 rules for tax and 3 rules for law. So there's a little bit of a disengagement when we go into this work contract for service part in the middle. If I just kind of bring your attention back to when I said before about if there is a connection. So if we sorry, I've asked you to move on a slide. Can we go back a slide?
Sorry.
I'm so sorry.
Go back. Yeah, of course, yeah.
If, for example, if we just look at the top line, if the umbrella and the agency are actually connected, so that whether that's through joint employment or whether you've got a connection of a director, that connection would be ignored and the liability will move up the chain. So potentially that's where I was saying the end client could become liable if there is a connection in play. Equally, if that agency is offshore, that would be ignored and your liability will move up the chain. So asking those questions, making sure you know exactly who you are working with and what type of contracts they're using is another step you can help to kind of mitigate your own risk. So, what we would class as the vanilla model, contract of employment undertaken by the umbrella company. They are therefore responsible for not only the pay-away liability and all of what's happening now under the new reforms, but also everything that's coming in the Employment Rights Bill. So, the statutory sick pay from day one, the holiday pay. So keep it as that kind of as much as you can to the vanilla umbrella model. So you've got the umbrella, you've got an agency that you trust, and then you've got yourself. So that it kind of a step further to this to be able to de-risk yourself. If you are being offered unrealistic incentives, it should be ringing the biggest alarm bell possible. I'm sure you will all be fully aware the margins within the chain, a temporary work chain, are extremely tight. So obviously what you pay across to the agency, what the agency pay across to the umbrella and the umbrella pay onto the worker, there is not a lot of room for manoeuvre. And umbrellas standard margin is £20-25, but out of that they have obviously all the insurances, payroll, so what they actually earn is really low. So if they're being able to offer agencies the sun and the moon, and in turn the agencies being able to offer end clients, I've just said the sun and the moon, the world and the universe, it's not realistic. So that really should be ringing alarm bells of how are they able to afford this. As I mentioned before, outside the regulation schemes, FCSA has already seen one. I think it'd be fair to say we've probably seen about 30 by now, different variations of the same thing. But they won't work. The one that we heard of literally the day after the rules came out, we put in front of the lawyers. We laughed, they laughed, and then we flagged it to HMRC to say people are already trying to find loopholes to this. So it's not going to work. And I think what all of this will do is make it really clear where the non-compliance is. They will be easier to spot. We call them payroll pirates, because ultimately that's, they are trying to pull a fast one. They're trying to defraud, not only, the Treasury, but the worker, the agency, the end client. Where we spot them, we report them to HMRC, and I would encourage everybody who knows about a non-compliant operator to report them to HMRC. If you're not comfortable doing it yourself, feel free to send FCSA a message. We will report them on your behalf. We can do it anonymously, if you don't want to be named. But the more we can get the non-compliant operators out of the market, the fairer it is for everybody. Because it's not only down to, if you're engaged with an agency who are engaged with a non-compliant umbrella, it's not only things like, the liabilities that aren't paid, but we don't even, you may not even know if the contractor has insurance to be on site. So that it becomes quite a bigger picture. Have they got the right to work to be there? Because if they're not compliant on pay, the chances are they're going to be cutting corners on other things as well. So I can't stress enough, trusting who you are working with and knowing who you are working with is probably the biggest takeaway you can take from today. So action points. Look at your contractor base. Are you engaging a lot of people directly? Do you know who they are, where they are? With Employment Rights Bill coming up, are you aware of what the changes are going to happen with that? We will be running additional sessions. I'm quite sure I'll be linking in with Meraki to provide some additional support there as well, when we know what is coming on the Employment Rights Bill. But I definitely say step one is to look at where your risk is and how big your risk is. And that equally then moves into step two. Who is in your supply chain? Do you know? Do you know who your agencies are working with? And therefore then what contracts are they on? Are they all using contract of employment? Or have we got some really weird random contracts in there, some hybrid ones potentially? Is everybody UK based? It goes back to where I was saying before, if you are engaging directly, it is definitely worth looking at whether you should put an agency in the chain. The agencies, sorry, I'm kind of speaking for Meraki here, but they do due diligence on their umbrellas a lot because they need to. So they know what they're looking for and they can compare umbrella to umbrella. So you kind of start to see patterns when you look at a bigger picture. Obviously, what's the paperwork like? Have you got copies of all the documents? Are you getting proof? Are they answering the questions that you're asking them? Things like indemnities. Indemnities are an interesting one. Certainly from an umbrella's point of view, sometimes an indemnity cannot be worth the paper it's written on. But it can provide peace of mind. I would go more on the transparency and an open communication and dialogue, and asking for evidence and receiving that, and you're looking at the financials and the stability and things like that of companies. And if you are using an agency, I would strongly recommend that that agency is only using FCSA accredited companies, because it is additional checking that they've gone through, and it's not cheap, and it is not a tick box exercise. So those people, those companies that have proactively said, yeah, come and look at me, scrutinize my business, they are the ones that have got nothing to hide, because we look at everything. We're not just looking at the payslip and whether it adds up. We are looking at AWR, modern slavery, the expenses process. So it is such a bigger picture than just the sums. I think we
think
have
that's
come to
us.
the end there.
I can draw breath now.
Yeah, sorry if I'm speaking fast.
No, 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 not at all. That's amazing. Thank you so much. So I'll just stop the screen share there as well and let you get let you get a bit of breath. So no, no, thank you so much. That was wicked, and I am sure our clients will be delighted for that as well. So, was there any? I mean, we do have a couple of kind of questions and stuff that have been popped through to us. Is there any kind of questions and stuff that have come through on the chat so
Yeah,
far?
yeah,
So,
Gordon, I think I wonder if it's better to start with the questions from the
yeah,
people on the
cool, mate. If you
chat.
can do.
I don't know if it was Vicky asked a question. Given the close relationship between payroll operations and invoice finance in the recruitment sector, how might the upcoming reforms affect factoring providers' approach to risk, funding decisions, and client onboarding processes?
So I think what we've seen already is the factoring companies being a little bit more hesitant to who they're willing to fund and provide the additional support to. We are seeing that they want more, more checks. So, and I know that there have been a few that have mandated FCSA. So, we will provide it, but it's got to be an FCSA umbrella that you're using. Um, I th Because they've kind of sit outside of the chain, we haven't seen as much request for due diligence. That isn't to say, they could quite well ask. FCSA have a diligence hub, which is an online compliance platform, which is it's there to just share information between agency and umbrella, or end client and umbrella. So that might be an avenue where the factoring companies actually want to do that as well. It provides credit score. It also actually provides bank details. A few years ago, at the end of 21, there was a group of, I don't even know what the right word to call them, dodgy, let's just say dodgy, companies who decided that they would clone compliant companies. So they were then approaching agencies saying it's, compliant umbrella, and they were spelling it ever so slightly wrong. So the agency was thinking that they were working with the compliant company. Oh, we've got to change your bank details, and then sending the money to the dodgy company. So all of these extra steps that can be taken. So we did quite a big education piece with the agencies, our recruitment partner agencies, and our umbrellas, and to be able to find a way to link up and share that information in a really secure way. So rather than it's just a phone call or an email from Joe who you've never met, it's all being done in a really safe way. So the agency are never going to get conned, and equally the umbrella are providing the contractor with insurance and everything else that they need to be able to work. So I think I've kind of gone off topic a little bit, but transparency and just trust. I can't stress that enough. I ask the questions and work with companies who are willing to answer the questions, because the dodgy ones won't.
That's good. That's good. So the other question has come in, and we still have a little time if people want to put questions in the chat function. It comes from Fleur. If the topmost agency goes into administration or collapses, could the end client be held liable?
I think the way it is a really good question, and in short, I don't know. the way that joint and several liability is to work is it's the relevant party. So if you take that party out of the mix, I mean, HMRC can potentially go after anybody they want to. They can go after the worker, but those rules are already and still in play. Whether they could go up to the end client, potentially yes, but it would have to be, there'd have to be mitigation in it to do it. And I think we've had the conversations with HMRC about how would they even know who was in the chain? Because that is a query. So if you're working with an umbrella and that umbrella fails to pay their obligation, and I don't mean, they've just missed paying it by a day. I mean, they're blatantly not paying it and having no intention of paying it. So it's fraud. It would then go up to that level. If you take that out of the equation, but there is potentially an agency below or the end client above, the way that it was worded, they would go to the agency below, because obviously that then becomes the one who would end up with the contract to the end client. If there's no agency, the end client is at the top of that chain. But there's no specific wording to say they definitely would do that.
That's fascinating. Thank you.
Difficult one, I suppose, that one.
One thing I didn't mention, and I've just realised, is where the liability hasn't been paid, whoever is in the chain is only responsible for their proportion of liability. So say, for example, it was £5 million that was owed, but the top agency in the chain, it was actually the proportionate was only £200. It would only be a £200 bill. It wouldn't be the 5 million to cover everybody else, which was one of the questions we asked HMT as to how you are going to work out who is responsible. And that will be done via agency reporting, the intermediary reports, to know more information, and obviously where the money's coming into the umbrella or going out.
Good. Thanks so much. We had just another couple of questions, Deb, as well, just hopefully relatively straightforward ones. To clients, have they got the right to ask agencies and umbrella partners for them to see their contractor payslips?
I think it all comes down to the privacy policies, I'd say, that you have with your agent and with your workers. So if you've got it written into your contracts, the agency to the worker, that you are able to share that information, then yes. If not, then no, because sometimes the agencies don't actually have the pay slips, and the umbrella would. What I would suggest then, clients, is you ask the contractors directly, because that way you know what you are. If the end client, no, I'll start again. If the worker is providing it directly, you know what they've received. They can tell you also what has gone into the bank. So if those two things match, on an umbrella payslip, it shows how much money is sent through as the assignment rate. So you could see that there is 20 hours at £30 an hour. If that matches what you've sent, obviously it starts flowing down. If that's different to what you've sent, obviously questions will be asked.
Totally. Yeah, I mean, it's something we get asked infrequently, certainly. And like you say, kind of going up the supply chain on occasion up to our umbrella partners, just obviously keeping data in mind as well. So, and when would you suggest businesses, we obviously spoke a lot about supply chains, when do you reckon they should start kind of looking at and assessing their supply chain with the legislation coming in April?
Honestly, I'd say now. I wouldn't say wait, because if you are knowingly working with a fraudulent company, well, that kind of speaks for itself. If you are unaware that you're working with a fraudulent company, a non-compliant company, which could happen, they've pulled the wool over your eyes, their sales team are very good. The quicker you can unravel from that, the better. And obviously the thing that you've got to remember here as well is that contractor is employed by the umbrella. So it isn't just a case of, you know, you need to move and you need to move now, you are asking them to leave their employment and start again. So that could take a little bit of time to unpick. They tend to do it, you know, from an ease point of view, you tend to do it on change of assignment. So you'd wind out of one and then move across and wind into a new one rather than stop and start again. But ultimately, you've got to be confident of who you're working with. So having a look at, you know, probably step one, so how many temps do you engage with, whether that's via agency or direct, and then kind of put in 2 plans of attack. When you're working with agencies, which agencies are you working with and who are they working with? So it's great having, you know, if the agency themselves are saying we're compliant and we're doing everything wonderfully, but then they've got 9 really compliant umbrellas and then 1 dodgy umbrella that they're working with. It's that 1 dodgy umbrella that potentially could hurt. Sorry, I keep saying dodgy. I really should say non-compliant, shouldn't I?
It's candid. It's okay.
And then separately is obviously the ones that you directly engage. How long are the contracts for? What is your risk? And is there potential to actually put an agency in that chain to act as a circuit breaker, for want of a better word?
Totally. And I think it's quite often the cases of the businesses that don't use temps, contractors very often. Is quite often the instance. And there was a particular client I think that I'd kind of been speaking with recently, and I think, yeah, this individual kind of claimed that they set themselves up as their own limited company, and they're effectively paying this person into their personal bank account cash with no kind of contracts, paperwork, that kind of thing. And obviously that's a very extreme example, but I think kind of point being, if clients aren't hiring large volumes, you know, of contractors and temps and stuff, there can be a degree of, I suppose, commercial ignorance towards it. But as you said, with this legislation, alas, the commercial ignorance isn't gonna wash anymore. So
weirdly, as well, though, it's interesting you've said that. Sometimes, obviously, an end client speciality is the role that they're in. So, you know, if that's banking or that's their role, isn't it? It's not necessarily a HR function or payroll. What we have had historically is where an end client engaged a worker and that worker was also engaged elsewhere.
Yeah.
And there was a meeting and the worker was on the meeting for the other company and they're sat there thinking, don't you work for us? If you are working with an umbrella company, FCSA members cover about 250,000 contractors at any one time. So, and because of the way that the software runs, the chances are they would spot, and some of our members have spotted overemployment within their own company. So they'll be working with one agency and then also another agency for 40 hours a week. Don't know how that works. But they've been able to stop that quite quickly. So it's an extra layer of protection. It also, I mean, that feeds in itself to modern slavery, because whilst it could be the contractor doing it a little bit wrong, it potentially could also be somebody else taking advantage of that worker.
Totally.
So that there are some benefits of outsourcing the employment to somebody else because it becomes part of a bigger picture.
Wicked. That's the thing. And I think that's saying nobody can be experts at absolutely everything. And that's where there's other parties to hopefully kind of take a bit of weight out of that supply chain and kind of add their expertise, which is why I obviously turned to your good self for the webinar today. So wicked. Well, is there any more questions from anybody? Do you want to fire any last ones into the chat at all, or are we all covered?
I think
you've done
a fantastic job. You've answered the questions.
Beautiful. Well, wicked. No, well, thank you so much to obviously everybody for attending. Importantly, thanks very much to Deborah today for taking the time, bringing your wealth and expertise to us as well. So it is an important topic. So yeah, hugely appreciative. And if anybody's got any other questions, queries, feel free to reach out to any member of the Meraki talent team, or of course Deborah directly over at the FCSA, who are one of our key partners. And yeah, we'll pop over slides and any bits and pieces as well as the recording as well for those that wish it. And thank you for your time, and hopefully see you all soon.
Thanks all.
Cheers, folks.